The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days, 11 o'clock till noon, time that you're listening to right now, of course. And let's see, today is October the 28th. November, December, then 2014. Isn't that interesting? All right. Thank you, Steve, for a great 2 hours, always educational, and talking about education. Don't forget, a week from, is it a week from Friday? Yeah, it's a week from Friday. A week from this Friday, I'll be doing my Master Trader series. That'll be the Chapman Wave methodology. I've spent a lot of time thinking about how I could hone in on the more advanced concepts, even though I'm gearing it right from the very beginning. For beginning folks who have just become interested in the Chapman Wave methodology, you heard how often it's correctly notated at a peak D. One of the techniques that I use, how that's where you can get the sharpest decline, or when we get that buy signal going to a buy mode, which elevates and upgrades a buy signal to a buy mode. All these different techniques, but what I really spent time thinking through was how could I introduce the concept, absolutely the simplest concept I've ever heard of in the stock market, identifying each successively higher peak, while at the same time gearing this towards folks who either don't have all that much time, but they really want to get to understand technical analysis. They don't want to put in a whole bunch of software. They want to use the software they've got. Most software packages have at least trend lines that you can draw in, channels. Sometimes I'll have a circle, maybe an arch. And I'm going to show you how to use it. I'm going to show you, looking at a drawing right now. This is the E-minis. This is the December contract. So I have an alternate wave count here, F/B. Now that's where it gets a little confusing. After all, the idea is to get you to a D. Well, it got you to a D from the 1618's low bar that was in August. It went successively to peak A. I give them capital letters, capital A, capital B, capital C, and it takes you to at least D. D, the Chapman Wave song goes, the wave goes to A and then to B, even the anticipated C and D. That's when it flashes a cautionary light, but all you gotta do is make your stops real tight. Suddenly it goes to E and F. Now that's where we are. Is this an E to an F? Or is this an E/A, a brand new buy mode that's gone to a B? Excuse me. What technical indicators would you be looking at to say, be careful, this is not F. There are too many characteristics that say that there are still positive divergences that need to be need to unfold. What are those indicators? What can you look at? And I'm going to introduce you to them. So there is a certain simplicity to the waveform, and then, as in anything that you study carefully, it can become a little bit more. I'm not going to use the word complex, because complex implies that there are a number of different aspects. In this case, there are only two aspects. Either you're making a serious top here, because peak F, the 6 highest peak, is where that's what you would expect, or it's going to be a continuation pattern. That's real simple, those two things. Which one is it? And in my assessment is we have a continuation pattern, that there should be higher highs to come this week. And then we've got to be very careful, at least in the shorter term. But wait a minute, you can lose time frames, and I'm going to show you how you can use the time frames and what technical indicators you can use there, like the MACD and the stochastic. Look, just two trend lines, this one here And this one here, if you're looking at Tiger TV in the 120-minute chart, from 1734.50 going to peak A, B, C, peak D at 1762.25, then it starts to pull back. Why does it pull back? But if you look at different indicators, they give you the clues. Now, here's something that's even more important. When I am looking at these charts, I want you to be able to look at, oh, did I put that in here? I did a lot of work. I did a ton of work over the weekend on looking at chart formations and trying to give a two particular chart patterns. Is that the one that I'd like to look at? No, I don't want to look at that. Oh, and I don't want to make any changes here. All right, I will find it. I'm looking for just a blank chart that only has the price. And when I find that, I want to explain what I'm going to be doing in this all-day workshop, and it's on TFNN. Go to the front page. Let me tell you, this is an unbelievable bargain. The registration price is $7.95 all day. The 7.5 hours. We're taking $200 off the registration price, early sign-ups. You will also get my newsletter, $128 right there. That's a value, just boom, right there. I'm also including introducing the Chapman Wave methodology. This is a $249 value. This is the book, Introducing the Chapman Wave Methodology. There are how many? There's a chapter. There are 27 chapters. But I give you exercises along the way. Chapter on the falling axe, the phantom peak, opposing and complementary price movement. Look at this complementary price. This is just a beautiful thing to be able to learn how to use. Look, a peak D in the diamonds twice, 3 times. Peak D in the diamonds, that should be yellow. And look what's happened. You've got an unusual peak G, which corresponds to an unusual C minus, just, well, not so unusual in the inverse. But this is the DOG, the DOG ProShares Trust Short Dow 30. Look how you can use the technical indicators. I love this. It's just so important. So in looking at the different chart formations, I haven't finished notating here. You can use the mirror image. Some of you are very good at looking at just price movement to the upside. Some of you are looking very good at price movement to the downside. You'll be able to choose when you are able to use these ETFs in that manner. Another thing that is really important to me is I will show you how my newsletter works, how I use the Dow 120-minute chart, peak D right here. Did it make a new high for 570? Yes, it did. So D is extending. You haven't even made a peak D yet in the 120-minute chart. Look at the VIX just rallying now. It's up 52 at 13.61, and I typed in here. The VIX has shown little desire to push into the high 14s, but in the 1350s, the market does dip. What's the Dow? Down 21. What's the S&P? Down a point. In the 12s, the market tests the 15,590 to 15,610's resistance line. Well, I'm giving you both sides of the coin. The one that's working is the one where the VIX is rallying. This is the short-term trading index, no signs right now. And this is the Dow, which has made a new high today, so it's still leg D. And the S&P made a new high, and that's E/B. Now, how can you be in B in the S&P, but D in the daily of the Dow? That can happen sometimes. It means that there's a chance that the S&P will be slightly weaker, make more peaks, with the Dow perhaps only going to an E or an F. But I'm holding off because what we're looking at is how does the day close and where do all these different parameters fit in. I want to show you chart patterns. If you don't have all the technical tools with the MACD and stochastic, you don't really want to use it, I'm going to show you chart patterns that repeat over and over. Look at this particular pattern right here. You've got the Dow, and this is what I've discussed for my subscribers. You've got this is what I showed today. You've got the Dow doing how many bars to the upside? Well, it went 14 bars to peak unusual peak G at 15,709 back on the 18th of September. We have gone, this is the 13th, I believe. Is this the 13th? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Yep, the 13th session. There's the 13th session, a little inside a bar. So I'm watching that because similarities, they occur all the time in the markets. Why? This is just human nature. And let's go to the markets. So Dow's down 22 at 15,547. The S&P is down 1.61 at 1758. The comp index is down 13 at 3930. You've got gold up 750 at 1360, holding really nicely. And I'll talk about gold in a short while. The next thing is the silver down just 4 cents. Oh, now it's up 1 cent at 22.60. You've got platinum up 16 at 14.69. Copper's at 327, just stuck in that range. Crude oil is stuck at about 98.5. And bonds are, what are bonds? Bonds are and the TLTs at 108.30, up 0.01. I will cover all those in a moment. We're going to go to our first caller with Garrow in Newport Beach, California. Hi, Garrow. How are you doing?
Very good. And you, sir?
Very well, thank you.
Regarding Visa, again, I want to ask you a question that do you think any strength there? Today it hit another 52-day high.
Okay.
Yeah.
Let's just look at, folks, we're looking at Visa. I did some work on Visa over the weekend because it's really the monthly chart that is, besides being fascinating, because one of the technical tools that I use is the 9-period exponential moving average, and I wanted to see if a faster moving average can go above that to start giving me signs that Visa is getting toppy. I have an alternate wave count in the monthly chart because there was a moment where there was what I call an overlapping wave. This is a technique, a very powerful technique that I use that says if there are certain peaks that go to the upside and then the price fails but holds well above the low, if you get within that another buy signal and that buy signal complements the same number of peaks as before, in other words, Visa from its low back in 2009, it was January of 2009, a little earlier than the general market, hit 41.78. It went peak A, peak B, peak C, and it stopped dead right in April of 2010. Fascinating because March was the low in the general market. Remember, some of you might recall that we were able to buy the Dow Diamonds at the exact day of the low. I think it was at 66.50, a fantastic deal. And we held it for about 18 months. Now, what we're looking at is underneath it, it pulls back to 64.90 in September, and then it starts slowly working its way up. And what does it do? It has 3 peaks below that peak C. That's peak C minus. That is a signal that I've developed over the years that says a rally that comes after that should take it to a very powerful leg D. And then you can get a pullback, but that D is something that's a requisite of this particular pattern. And what does it do? It breaks above 97.19, the high of April of 2010, and it powers up where? To May, almost a year later in 2012 to 125.35. Now we've got something a little bit more complex in the waveform, and I'll be right back with Garrow in Newport Beach straight after this break.
Thank you.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technician South. Dow's down 25, S&P's down 1.5, and we are on with Gareth from Newport Beach, California, looking at Visa, trading at 202.75. Down 31 cents. So, Gareth, this is what I've done, and maybe you'll be able to archive this if you're not looking at Tiger TV right now.
I'm looking at it.
Okay, so I'm looking at Visa, and this is the 120-minute chart. I took out all the technicals. I didn't have time to take out. In fact, I'll do it right now. No, I'm not going to mess with it. I've got the 120-minute chart. I don't need the candles. I just needed the highs and the lows, and I needed the pattern. If you half close your eyes, all I'm going to do is this, and you will see that I'm drawing an arch formation. And that arch formation, in fact, to do it accurately, I touch as many lines as possible. You'll see that on the 120-minute chart, even though this is, I'm going to move this away for a second, you'll see behind there's the notation in the Chapman wave that there was an unusual G pullback. Then it goes peak A, B, C, D. D's where you expect something to happen, and this is it. So I'm looking at Visa, and I'm saying there's a chance, yes, it could go higher, but it needs a little bit of a breather right here. So using this particular technique, what I'm going to do now is, it's always when you're drawing a trend line to go to the lowest low in an arch formation, the angle is almost always way, way, way too steep. It's an unsuccessful way of doing it. Instead, I do it by eye, and I say, where are the bottoms that I can look at on the left side, the lower lows, the troughs, that would give me a trend line that both makes sense in terms of the patterns that I'm looking at, as well as the most hit number of low bars. Well, I've got a line here. That's pretty good. I would prefer to have more comfort by saying, let's go to the one that looks like, there you are, it's hit almost 3 times. 1, 2, 3, and that's the line. And it says that Visa, on a very simple method that I'm looking at here, should come back and test the 201.74 area. If it breaks that, then that spike up candle that you and I were talking about the other day, where it spiked from the close on the 23rd, it had a 199 round number high, closed at, what did I say, 198.90. It gaps up the next day on the 24th, and that's the run that's gone all the way to a leg 4. It's not a peak yet because we have to wait for the next bar. I'm looking at this and I'm saying, okay, so it says the upside, certainly it can break out, but if I do something very simple and I draw another trend line to the top, trying to make what I call a wedge formation, I'll make this one blue so that you can, I'll make it blue, nice and thick. Blue, and I have another one here. These are just trend lines. I know nothing about the waveform. I know nothing about anything but the patterns that can be drawn to give you very good parameters. And it says on a very short-term basis, if Visa pulls back underneath 202.20, then there's a real good chance it's going to test this next trend line moving to the side of 201 in the 201.60s. That says, now let's quickly go back and look at the daily chart. I was going to turn this into a daily chart, but just for now I'm not. I'm going to keep it here. The daily chart is in leg E, and that's about the only way I could really count this using the method in a very structured way. However, the stochastic's at 92% and the MACD is still good. It says, okay, if this is going to pull back, very strong support between that 201.5 level that we were talking about and the 199.77 9-period exponential moving average. Now, I do want to do this just to show some of the techniques here. Is this the blank one? No, it's not. Here's the blank one. I'm going to turn this into the daily. Let's hope that I don't get all those repeated pattern. Oh, it is repeating. That's okay. I'll get rid of that in a minute. But what I am looking, I don't have to get rid of this because this particular pattern for the 120-minute chart almost fits the same kind of thing that I'm looking at here on the daily. And the daily says the patterns that we've been looking at is that Visa has a powerful move up and a powerful move down. It's in the middle of a powerful move up. And the resistance that I'm looking at here, just based on this arch formation, says that the high today of 204.50 is going to be very important for the next 2 sessions. Why? If there's no takeout today, and tomorrow, by tomorrow, the high that we saw today of 204.50 is taken out, then we're looking at the same trend line. It turns out, but move it down a little bit, and that says 201.90 is the level in the daily that would be key support. And then what I do is I say, okay, so that now I know that there are many green bars and just a few red bars going to the downside. So the pattern says it's in an uptrend. Where would it be opportune to at least get a trade if there was going to be higher highs? So we've got a break coming up. I'll do during the break, I'll do a couple of things and we can wrap it up as soon as we get back, Garo. And I'll tell you what I've been looking at. I'm not looking to short just now. It might be one more spike or 2 spikes to the upside. So we'll be back with Garo and Travis in St. Louis straight after this.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Dow's down 17, S&P's unch, and we're on with Gary Newport, please. So Gary, I'm going to make a recommendation. So far, this is absolutely not your SAR. This has got none of the look that you're looking at, other than there should be a couple of points pullback at some stage. If in fact Visa pulls back under 197 this week, that'll be a heads up to say, uh-oh, be careful. That is an E, and it's a peak E, and it's going to be pulling back for 3 to 5 sessions, and that's going to be very important how it holds it. The only way I would look at this right now is because the MACDs, it's very strong. The stochastics are 92%. If this pull back 3.5 points, somewhere under 199.50, somewhere between 199.50 and 197.80, no, 199.50 to 198.90, and holds, I would try for a real quick rally above 204, because I think this seems to be headed towards the 204.5 to 205.25 area. So that would be worth it. But I'm getting real close in many stocks to starting to look for the first time in a while at the short side. So I think your question was where to buy it for a pop-up. Where do I think support would be? That's the area I'm looking at. But I suspect that it is getting real close. It's within 2.5, maybe 3 points on the upside. Very important 2 to 3 points on the downside as support. And that's kind of the trading range I'm looking at for the next week. I hope that answers part of what you were going to ask.
That was excellent, sir. Excellent. I wrote all the numbers down, and you're so correct and so accurate. And I checked that with my own charting, and all the numbers are there.
Well,
So
thank you very much.
I appreciate it. Thank you, sir. Thank you.
Thank you very much, Garrow. So, and folks, thank you. Folks, here's another opportunity. This is where you can look at the pattern. And you remember, I like to think that V-shaped patterns are often a little bit more powerful because they don't take the time to curve around to the bottom and curve around to the top. They just go straight down and straight up, so they often overshoot the left side. We'll talk about that. We'll talk about the left side, right side price time match that you can look at in chart formations. Just a whole bunch of things that you don't have to know that much about the Chapman wave structure of peak A, peak B, peak C, D, etc. You have to know the patterns. We'll be going through that in my Master Trader series. Let's go to Travis in St. Louis. Hi, Travis. How are you?
I'm doing great. Just recovering from another wild game last night. A gut-wrenching loss for the Cardinals, man.
You know, I have to consider that this goes to those when Sampras and Agassi used to play, or Federer and what's his name with a fantastic backhand. Oh, I'm just blanking out on his name. When it goes down the wire and just fabulous playing on both sides, and you can just look and say those. The word professional applies to absolutely every one of them, because even under the worst conditions, they play Nadal. Thank you, Nadal. They play superior to almost any other human being. It's just fantastic to see. So the result is almost. You just got to shrug your shoulders and say, "Well, we lost this time, but maybe next time we could win." And things were so even, right?
Yeah. I've learned not to, I can anticipate nothing in this series, honestly. I mean, you can't anticipate it, so it's pretty crazy.
No, well, that's the other thing about sport, that right up until the final bell, especially something like soccer or low-scoring sports, right up until the final bell, anything can go, anything can happen. That's what makes it so exciting, besides the fact that you're seeing players play at these are levels that I was watching. I don't watch all that often, but I'm a fair weather friend. Whenever the Red Sox get into the grand finale or the Patriots, that's when I watch. And I've never played the sports, but a little bit of baseball, but not much. So I'm a novice there, but I understand it because I do play sport. I've always played sport all my life. So, but to see the accuracy now today with the video, the cameras are just unbelievable. The way they can pick apart the way the ball goes, the trajectory, the little movements that the ball makes, and then you see that the ball's coming at you at 96 miles an hour. What would most of us do at 96 miles an hour? We would duck, right? It's fantastic. It's fantastic. All right, let's get to the stock market. You wanted to look at?
Yeah, I'm fairly heavy in cash, probably the most cash I've had in quite a long time. But I am trying to still try to play an upward move because I'm kind of with you on it looks like we're going to still rally maybe this week. I was looking at eBay. Is this a falling axe formation in the daily?
You know, it is a falling axe formation. Folks, let me just go through this quickly here. This is what we're looking at. There are patterns that I like to look at. In the Chapman wave, there's a particular pattern, and it's I used to call it the dreaded H. I still call it the dreaded H, but it's really the H formation. Chapter 17. So let's go to Chapter 17. Let me just show it for a moment. That pattern has the price falling, and it makes a little scallop, a little arch formation, and that arch formation breaks the left side support, and it keeps doing that until it makes a much greater one. That pattern can then, and this is what I wanted to spend a moment on gold, the GLD, but maybe I'll do that tomorrow. And that pattern, when it comes to an H pattern, can then go into an M pattern. So here we are. Now let's go back. Let me go back one chart. You're looking at Tiger TV. Please, folks, check out Tiger TV. It shows what all of us here at TFNN, the hosts, are doing. It shows the techniques involved. It's just a fabulous medium. Now look at that pattern. Now look at this pattern. See that? Arch formation, arch formation. So I'm not sure that there's that much in eBay, because if it was to rally right now, it would go from 51.64. You'd want to be looking at eBay having a sudden takeoff that takes it not from the 51.66 level that it's at now, up 3 cents, but over the arch formation 52.92 high bar and right into the gap area, fill the gap, and go into the candle of the 16th of October towards the 54.44 area. I just don't see it. In fact, when I look at this, I'm suspecting that eBay is giving me a heads up to say that the weekly chart has made a series of patterns. I spent a lot of time this weekend, and I sent out last week a quiz to my subscribers, and I said, this is a pattern we're looking at in the Dow. I didn't say what it was today. I said what it was. It was the Dow chart. And then I turned the chart upside down. Now, if I take this particular chart, it's almost the same thing, where it's in a rectangle trading range. The only difference is the Dow was making higher highs and higher lows. This is stuck in a trading range. It says to me on the weekly chart, yeah, maybe it could go to 52.97, the weekly 9-period exponential moving average. But I'm really looking at the monthly, and the monthly says, be careful, because if at any point on a monthly basis, if eBay, EBAY is a symbol, trades under 49, closes under 49.62. I'm going to make it 49, which is only at 2.5 points away. If it closes under that, eBay has made a kind of top that says it's going to take time and price to really recover. But it's probably going to hit the low of 45.66, that low back in November of a year ago, of 2012, if that occurs. So I see very limited upside. Now, the thing about a rectangle formation is just when you think it's going to break down, it sometimes pops to the upside. That's why I said 49. It needs to break 49. Anywhere in that 50 to 49.5 area, it could still bounce again. I'm going to say avoid eBay. I don't think it's a bounce. I would say that if it did bounce, I'd be looking to short it.
Okay, great. That answers my questions completely. I just thought there might have been an opportunity here, and I'll move on. I think there's better opportunities.
Not for your kind of trade. I don't see it as an opportunity. I don't see it as a call option. I don't see it anything. I see it only as an opportunity to consider it as a potential declining bounce, waiting to come back down and do the test of that 50 to 49 area. Hope that helps you.
Man. Hey, thanks a lot.
And good luck to both our teams.
Absolutely.
As long as they keep great baseball, everybody will watch. Thank you, Travis. Let's go to Tony in Paramus, New Jersey. Hi, Tony. Yeah. How are you?
Good. I'm looking for, first one's UNG and the next one's Intel. What happened with UNG? It just dropped down 50%.
You know, this is so interesting. And one of the things that I was going to do, I was looking for my subscribers as a potential to get into UNG, because it did everything we were looking at just recently when it pulled back from the $18 and about 45 cents. It pulled right back to the 18.19 area. UNG is the United States Oil Fund, natural gas fund. And then it had a spectacular day on Friday. Now, the thing about natural gas is that, in my experience, the bounce of, and that's the only reason why I held back, because I had no idea it would do it. But you see the rally, and I actually spoke about this just briefly recently. I did not expect it to take out $18.18. But when I looked at it, the low off the 26th of September, I don't know if you traded this, had a fabulous turnaround, had a very nice leg A up, pulled back, just as I thought that there might be today, but I never even guessed it would really go from a high of 18.99 down to a low so far of 18.16. Doesn't sound like much, folks, but believe me, natural gas, that's quite something.
Hey, I got a question.
Yes.
The point and figure charts, I don't know if they're accurate or not. I go to stockcharts.com, says it's going to $9 UNG. Is that accurate or it's not?
Now, your question is it accurate that it will go down to $9, or the fact that the point and figure chart is doing that?
That's what the point and figure chart is saying. Is that accurate?
Okay, you know what I'm going to do here? I wonder if I can. I don't think I can. I should be able to, but I don't. I haven't got it set up right now. I do have this that I could switch to point and figure.
Do you use them in your charting?
I've used to use them quite a lot. And there was a fantastic, I'm trying to think of what his name is, who used to use point. When he was right, he was unbelievable. unbelievable. When he was wrong, as in 2000, when he expected prices to go higher, that was not good. And one of the
where do we think UNG is going? Where's UNG going in your
I just want to say, one of the things about a point and figure is it really is a look back as well as a look forward, but the look back, that leeway between the X and the 0 could be quite something. So let's just do this. Now, what I wanted to say is that the pullback, the H formation that was caused by the peak B and pullback on the 1st of October and the next day, the next 2 days, in fact, was kind of what I thought might happen, because I thought this, what I call a Roman candle pattern of the candle of Friday. I thought there was a chance that we could pull back maybe to the 1870, maybe even 1860s over 2 days. This is a big drop. So it says to me, before you tell Tony anything about the daily, we have to look at the weekly chart and the monthly chart. And if I look at the weekly chart, the week has barely begun, just 2.5 hours into the first day of this trading week. UNG cannot close any day below 1781. Because if it does that, it says that the weekly chart on Friday could actually make a much bigger H pattern than I was anticipating. And I don't want to, I don't want anyone to be in that situation, that you are vulnerable. And that's the reason why I want to also look at the monthly. And the monthly chart says we've just got 1, 2, 3. We've got 3.5, was it Thursday? So we've got 3 days, 2 3/4 days, in which the monthly chart needs to get to 19.26 or higher. And the weekly chart needs to get to 1882 or higher. So now, you don't have anything on right now, correct?
Correct. I'm looking, because what do you think is going to happen when the Fed meets on Wednesday? We're going to blow the load and go up and reach our highs, or a sell? What do you think?
I really have to wait for my waveform to play out. My thinking here is that later this week, by the middle of the week or somewhere around there, I'm suspecting...
It's the Bradley turn date on the 2nd of November, you know that.
Oh, is it the 2nd of November? Oh, well, yeah. I'm real close to some kind of a short-term top, and that's why I'm starting to look. Although we have some longs, and some of them are doing real well. One's up 3% today, another one's up. Oh, both two are up 3% today. I'm doing a stock at a time. So let me answer your question. If I was to trade UNG, I was not in it right now, let's just say, and if you're in it at $18.49, this is not a big deal. It's disappointing, but it's just not a big deal, because the stop that I would have put in was around about $17.98 on a small position, if that was the case. Now, let's do this. The low of, I know that you're looking at the charts, so the low of $17.90 on the 4th, to me, that is going to be really critical. So the close today on UNG is going to be important. Would I set up a trade right now? I'd say I would only do it on a rising price, because the second rising price after that leg A up just failed from Friday says that I've got to have patience. I need to see the gap filled from the low of $18.50. If that gap is filled by Wednesday, and it's trading close to the $18.55 to $18.60 level, I think I'd be ready to start a position in UNG. If
and when
it breaks,
you get back, let me know what you think the dollar's. When you get back, let me know what you think the dollar's going to do.
Okay, so hold on. We've got Tony in Paramus, New Jersey. We're looking at UNG, and then we're going to look at the dollar. We also want to look at Intel. We'll do a bunch of those things. We'll do a lightning round as soon as we get back. Basil Chapman, and we'll be back for Larry's show. I will be doing Larry's show.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book, Introducing the Chapman Wave Methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We've got Tony in Paramus, New Jersey on the line. We looked at UNG. I've just done the UNG chart right here, what I call the naked chart, and this is the pattern that I've got. It says to me, it's a pity that the price pulled back below the low of Thursday, below 1818. It went to a low so far today of 1816. To tell you the truth, I don't mind this candle right now. I need to see a pop up tomorrow. I don't want to see it even. I would love to see it a gap up above 1838 tomorrow. That'll say to me, great, you've done your homework. You're making higher highs. You did make a slightly lower low, but you're making higher lows as well, except for this one bar, and that has to be an aberration as a trough C. So here are my parameters. UNG, if it takes out $18 to the 1790 area, you can expect that it's going to retest the 1781 low. If perchance it starts to move higher from here, right now I'm talking about as we're talking, I would love to see it go into the wick of this candle of tomorrow, because then it's going to say, at least I'm in a trading range. I can start worming my way back to the 19s, but if I break down, you have to have patience. And that means you really have to have patience on the weekly chart as well. So that's that. Your question about Intel. Intel has an alternative wave count of E/F that's broken out. The real resistance was 24.43 to 24.43 back in July and August. Today's high is 24.39. It's real close to that, but the stochastic's at 85% and the MACD is good. It's got tremendous support at 23.94 to 23.77. That's going to be key for me. So far, the daily is looking very good. The weekly is actually acting very well and making a cup formation. I would say the weekly has 23.61 as support. If Intel breaks in the next 2 days, breaks above 24.80, somewhere around there, that's going to be really positive. That's going to help the monthly chart. Your question on the dollar was DXY. The dollar
the Fed's meeting. What do you think the Fed's going to do? They're never going to stop.
I don't think they can. What can
right?
the Fed do? The Fed can't really do very much of anything. So it's really not a Fed question.
Don't you think so?
I'm sorry, what?
The Fed's a corporation, a private corporation held by the wealthiest families. Don't you think it should be abolished?
It's a whole political. I think you got a real good point. It's a big deal. I don't want to even get into it. I just deal with what I'm looking at chart formations.
That's why we're all slaves.
Yeah. I don't want to get into that because let me tell you, you start thinking that way and it can really impact you. I'd rather say the dollar made a round number 79, and that's 79. If it's not taken out by round number, I'm putting that in. If 79 on the index is not taken out by Wednesday afternoon or Thursday morning, but instead the dollar is climbing to 79.70 or higher, that's going to tell me that the GLD, now I got the GLD in after all, is in leg D and it should be pulling back. They might become linked as mirror images, but I'm suspecting that the gold, the GLD, is making the arch formation that goes from an H to an M, and that M pattern has 135 to 137 as potential upside target. A lot's going to depend on how the 128.5 to 128 area holds on any pullback. So all of these charts that we just spoke about, not Intel so much, but certainly UNG, the dollar and gold, just on a very short-term basis, are saying to me, this is a very important moment over the next 3 to 4 days, only in that I'm going to include the TLT, which I'll spend a little more time on bonds.
And how do you have a Santa Claus rally if you're rallying now?
I'll tell you how. If prices go up in October into the beginning of November, history says that if you're strong into November, invariably you have a very good November to December. You know, I'll talk about that a little more. I'm going to be doing Larry's show, it looks like. I'll be back. Great. I'll talk about it in the next hour. Thanks so much for calling, Tony. I appreciate that. Basil Chapman, I'll be back in the next hour to do Larry's show, I believe. So, see you soon.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.